What's up, everyone? Welcome to another episode of the MLO Project, and this is setting up to be a jam-packed episode because we have the one and only Hammer J. Helmer here joining us, and whenever Hammer goes, the party follows. So this should be a very fun and probably triggering and offensive episode. Probably our most offensive episode.
I'll offend somebody.
He's going to offend someone. He always does. So it's awesome to see. But before that, let me get into introducing my co-host, as always, Mr. McAllister. What's up, buddy?
What's up, man? I'm excited. Excited to talk to Hammer. I haven't talked to you since Tag.
Yeah. I was supposed to have you guys out here, and I never pulled that together. So
we'll talk. Oh, look at that! Disappointing people already. Exactly. That's all right. So
my wife.
So that brings up the first topic, and that is Hammer disappointing people. So, Hammer, how many people do you disappoint, would you say, on a daily and weekly basis?
Well, usually there's about 13,000 that read my lock advice, so we can start with those 13,000 people. They get disappointed at some point.
Do you keep stats? Is your lock advice? Are you over, under? Where are you at?
Yeah, no, that's cool.
It's funny. It depends on who you listen to, because some people are like, you are right so often. And some people are like, I listen, whatever you say, I do the opposite. And I'm like, whatever floats your boat. I'm like, then why do you even read it?
So you don't keep stats then? It's all anecdotal.
To me, it's like poker. It's like my poker tattoo here. To me, it's all like poker. There's never a right or a wrong. You're playing the odds. And I guess when it comes down to originators, that I've seen some originators that they don't want to be bothered. They're like, I lock everything and I do whatever. Well, that's great. Fantastic on you. But in the meantime, not everybody, A, can necessarily have that closing skill to do that, or B, maybe you're doing a disservice to your consumer. I mean, so far this year, we generally see rates stay steady for kind of a few weeks at a time and then make a move. So it doesn't hurt that much. But otherwise, I mean, on a $400,000 loan, half a point in rebates, quite a bit of money. So It can make a difference. And it depends on the window, like when we're recording this, we've got, jobs date and stuff coming on, and that makes it more volatile. So if you've got somebody closing in a week or two, you don't want to mess with that loan, but somebody that's closing in a month, well, you know what? Maybe they turn around and save a couple $1,000. So,
yeah. Let me ask you something, because I'm sure you've seen the post too. It's like the new, I don't know if it was Fannie or Fred. I think it was Fannie that came out with their forecast and talking about like rates under 6 going into 2026, probably into 2026. And then of course, when you get those posts, and people are like, don't post that, don't talk about that, because then people are going to wait and blah, 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 blah. And I know we've had this conversation in the past, probably, I don't know, a million times, but like, if you're an originator and you're looking at that and you're thinking about it, I don't think the strategy changes at all in your conversations you have, but you being, an ex-originator, and your focus and your expertise on today's market, and because you're obviously looking at that every single day, like what advice are you, if a loan officer came, hey, Hammer, what should I be talking about? What are you telling them?
Well, I mean, there's a few things to consider here. So number one, buying a home is an emotional purchase. So if you're looking at home purchase, business, then you've got to remember that the rate, we're not seeing enough of a change in rate to affect payment enough to make a big difference. And I've been complaining about this for a year now. People are so worried about the rate. Home prices went ridiculous the last 2 years. And it's the home prices that have made payments unaffordable or less affordable. And the movement in rate, when you look at the movement in rate, it's not necessarily going to be that earth shattering. It may be $100, $200 a month for somebody that's taking on a $3,500 payment. That's less than 10%. It's not a big move. So what you really need to focus on is the emotional point of somebody's buying a home because they want a home. They want something that they can go ahead and they can put whatever paint they want on the walls, and they can change the kitchen cabinets, and they can mark the molding where their kids are growing up. And you've got to focus on that element and talk to a lot of people, and ask those questions of them that evoke that response of that they want to move. I think one of the worst things that we've done is you've got mortgage people that are trying to be mortgage advisors, like financial advisors, and a home is generational wealth, and it's these things. Yeah, but it's going to be all that anyway. You need to focus on that emotional side, and you need to say to them, why are you buying a home? What is it that's in your life that you want to make a difference on? I mean, for my son, he wants a place where he can have a bigger shop where he can work on his equipment. Like there's a reason. And you know what? The rate doesn't matter for that. So as much as we want, there's that part of me that says you need to pay attention to rate, because when you're in a transaction, you need to serve your clients the best. And I think that means that you need to know what's going on with rates and pricing and in the near term. And we've proven that in the last couple of years. This is worse than weather. We don't know what's going to happen at the end of 26. Fannie Mae, they can forecast whatever they want right out of their patukas. We've been forecasting things for years and we've been dead wrong in the last
yeah.
So, you know what? I can't tell you what's going to be at the end of 2025, and that's 2 months away, but I can tell you what's going to be at the end of this week. And that's when you're in the transaction. But as far as the other stuff, that's like every time rates dip. And I say this year, and even into 26, we're going to have windows. You got little windows of opportunity where you need to go ahead and get some business because rates dip. And you don't want to be like, oh, well, hey, I don't do it now. I have integrity. I'm not going to help you refinance now because when rates get even lower, it would make more sense. Yeah, well, we don't know. And every time that we keep setting ourselves up for that, it didn't happen. So don't walk away from business today because you're chasing the rate stuff.
Yeah.
Where's the line of like, because I kind of heard a little bit of both sides of like, hey, you don't want to focus too much on just the rate, because buying is an emotional transaction. It's a life event more than it's a financial transaction, right?
Right.
Where's the line? Because you also said once you get into the transaction, it's your role to advise as much as possible. But one of the things that I think about when it comes to this is like, in a home purchase transaction, a buyer has so much to think about already. Like I always used rate education as like more of a reactive thing of like, I want to be prepared so that I don't look stupid to the super educated buyer. But at the same time, like I don't want to necessarily give one more thing for them for a borrower to think about during the transaction, or one more way that I could, potentially steer even slightly wrong and a potential friction point in the relationship. So like, if you're an originator today, are you like proactively having that conversation and giving them the option, or are you assessing based on the borrower that you're working with whether this is an appropriate conversation to have with this borrower or not, as far as like the potential variance in rate during the transaction?
I'm always having the conversation. How I steer or lean in that conversation would depend on the borrower. Somebody that's got a tight debt to income ratio, somebody that's nervous, somebody that's very happy with where things are at now. You have that conversation and you say, hey, listen, if you're happy with where things are at now, we don't know the future, and you can go ahead and lock. And if things go down tremendously, most lenders have some kind of float down policy, but most likely, we're going to not see that, and you're going to close at this and let's move on. You've got other people though that they're not loyal, and sometimes you've got to use the rate piece as part of the transaction, realizing that consumers will give you up for a better rate. So you may be like, hey, if you're not happy with where we're at right now, keep your options open. This is what I do to monitor things, and we can follow along the way. Here's your potential risk, but here's your potential reward, and leave that decision in their hands with counsel. But yeah, how you steer them is going to be depending on what situation and their personality.
I think, and you said something, and I know you always say this, and it's something that, Jonathan Haddad talks about all the time in our mortgage morning calls, but it's about you got to have the like, why not have the conversation? There's no good reason not to have the conversation, whether good, indifferent, doesn't matter, because you don't know. Right. And ultimately, I think, the point that everyone should take home is that at the end of the day, it's your borrower's call. You have the conversation, whether they do or don't, great. And every borrower's situation is going to be different. I think loan officers, and let me ask you, and why you think this is, I know why it is, but I want to hear your answer because I think it'll be funnier. But why do you think loan officers look for that catch-all script for like having the conversation instead of like really making it personal and unique as it needs to be?
I think a lot of it has to do with that everybody thinks there's that magic script or that magic button to say. And a lot of people don't put the time in to educate themselves on how to have the conversation. Sometimes it's fear. They're afraid of having that conversation. Deals are hard to get. And that's why we're kind of leaning into the rate thing, but I want to move away and talk about the rate conversation is not even a relevant conversation for most originators who are not out there prospecting enough to get business. So if you're going to have that rate conversation, you can use it for getting business. You can have it with agents. But, like, especially one of the things I get frustrated about is every time we get to a Fed meeting, I see a bunch of originators out there who are jumping up as high as they can on their soapbox saying, oh, the Fed doesn't do mortgage rates and it doesn't this. And they're going to educate. They look like UFC fighters. They're going to educate you whether you want to be educated or not. They're going to take this thing to the house because that's the only way that I could show you that I'm a professional and I know what I'm doing. And these other chubs, listen, guys, I wrote freaking loans for over a decade. I knew more about guidelines and everything else. I was a unicorn. I'm a strong salesperson, but I had a really strong processing and underwriting understanding. And I really knew the guidelines and I could get deals done. And I would lose my mind at other originators that were total idiots, but they were fun idiots and they were friendly idiots and they were a hell of a lot nicer than me idiots. And they would get loans because they were out there drinking and golfing and having fun. And then the loan somehow got done because you had good processors and strong managers, but they would get deals. And, I had to focus on the fact that this is a business that you have to generate business. You have two jobs. It's a very unique industry. You're a loan originator, meaning you got to go out and originate deals. You got to find business. And then you're a loan officer where you get those deals done. And a lot of times people focus on the rate piece of getting when they're in the deal and getting the deal done. And the reality is, if you're not utilizing rate as a way to go out and find business and do business, you're missing out because we're all very simple. If I want to buy jewelry, okay, I don't buy my wife a lot of jewelry. So, or in fact, I can even get better one for you. I don't drink wine. To me, it's all spoiled grape juice. Wouldn't know the difference if you put the best Cabernet in front of me. If you said it was a cab, I'm looking to see if it's got if it's a yellow vehicle with checker flags on it. I don't know what a cab even is. So I'm having a wedding for my son. We've got to buy all the alcohol. So here I am in the store looking at alcohol and I go, okay, well, there's a really cheap wine and there's a really expensive wine. So I'm going to go with the wine in the middle because that's got to be good wine, right? I'm using price as an indicator of value. And people that are getting mortgages, they're doing the same thing with rates. People don't understand the rate conversation. They think it's really about rate. It's not about rate. It's about fear. I don't want to be taken advantage of. I don't want to be made to feel stupid. I don't want to pay more than I have to pay, especially in this environment where I feel like I'm paying more for everything all the time. So just, Michael, you should make me feel comfortable that what I'm doing is the right decision. Make me feel comfortable that I'm not making a mistake. Instead of trying to educate me, instead of trying to give me 7 different reports on where rates are doing and what, just say to me, you know what? Hey, you're getting a great rate and you are doing a great thing buying this home. And then I'm like, cool, that's all I needed to hear. Done. Done. So a lot of times, we overcomplicate the whole thing when you're talking about rate at that point. And that's why the rate ranges and talking about things is just to keep the conversation going with consumers. Like we do the weekly rate forecast. It's to keep that conversation open. That's all that you should really be focusing on when it gets to the rate stuff anymore. I really think so.
Well, let's use that as an opportunity to transition to the biz dev side of things. What are you seeing? I know that you have your business you've been doing. I think you've launched the what's it called? Swipe and
grab and go social.
Swipe and flash social. I think.
Yeah, there you go. Yeah. I am blessed to have a son-in-law that is amazing on social and has made money in verticals and skateboarding on social. And he really
Austin's your son-in-law?
Yeah, Austin's my son-in-law.
Oh, you didn't know that?
I had no idea. I was like, where did Helmer find this guy, and why is he sticking with Helmer?
Exactly.
I've been waiting for you guys to blow up.
I have a hot daughter. That's how I did it.
Well, that was all right, Donald Trump. Let's
hey, you got to use everything that you got.
Yeah.
So anyway, so when it comes to so we've got grab and go social, and we're out there. Glad I can make you guys laugh. We're doing grab and go social. We've got that element going because most originators, same thing. They're on social and they overcomplicate it and they don't realize. And what's funny, again, I'm a dinosaur. I don't feel old until I try to stand up and my knees don't work. But yet when I wrote loans, it was such a different time because it was pre-social media. We had the internet, but we didn't have social media and the opportunity to reach people. And I've built this into multiple products: Originator, Success, Grab and Go Social, Rate Sensei. You know, the reason I've been able to build a multi-million-dollar company and made millions of dollars in the last few years is because of being able to reach people. Like, we're sitting here all talking on the internet. And as originators, they misuse social media. We want to get on and complain about politicians or how we feel about different things. One guy that I never see do that, he's on that side of my screen. I don't know where he is on yours. Frazier. Frazier inspires me because I'm like, gee, I wonder how Frazier feels about XYZ. I wouldn't know, because unlike everybody else, he's not out there going, this is blah, 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 because it's amazing how split down the middle it really is. And you piss off everybody, right?
Yeah.
Like, you're either too much this way or you're too much that way, or you're not. And I find myself making that same thing. I'm like, man, I think the button I use most on my computer is the delete button.
Yeah.
Yeah.
So for biz dev, where do you want to go with that, Michael? Let's
so yeah, you've got your hands in a few different pots as far as like business development. So I'm just curious, like, what trends you're seeing. I'd love to touch on the AI piece.
It's AI search.
As a preview. Oh, okay, cool.
Well,
Yeah,
it's funny because y'all know, and I'm going to talk with Frazier tomorrow on another call of, I think most originators don't need to be bothered with AI right now. Almost none. It doesn't mean that I don't see value in AI. It just means that I don't think most originators need to do it. I think it's a distraction. I think they'd be better served going back to the basics of prospecting, relationship building, being authentic. You don't need to make some cool AI video of, no offense to AI Luke Shankula there, but I don't need to be the superhero. I could just hop on with the real superheroes like you guys.
His videos are so dope, though.
Yeah, well, but that's it. You know what? If I want to see dope videos, then I'll go watch Superman on the big screen. Like, and that's fine. But most originators, they're not in that space where they should be taking the time. So anyway, the AI search, though, is huge. How we interact with computers and how we interact with Google. And by the way, Google will win the AI search war. They're already winning. They were a little slower to the game, but when they step in with huge momentum. So, like what we've done at Originator Success, all of my products, and my company is Helmer Solutions, although I've never used that name. Nobody knows that. But all of our products are designed for helping originators get business from Google, AI search, and social media. And AI search, like, we revamped our website templates in the last couple months to put more in the back end of what AI search is looking for, because people are going on their devices and asking AI, how do I find a good mortgage broker? How do I get a good mortgage rate? And they're asking these questions, and that's what opens the door for business. One of the cool things was, back in the day, you would never outspend Rocket when they were Quicken Loans. You were never going to get internet business when I was an originator. You just never got it. Frazier, you remember that, right?
Yep.
Like, it was a money game and you just couldn't participate. And when I accidentally ended up in the Google search space because I got so frustrated. I'm like, hey, I got to call my boy Michael. And then I'm like, oh, what's his number? And I'll Google him. And I'm like, I can't find Michael's number. Like, if you're an originator, how come I can't find your number? And so that was how we started getting into that. And then the local search really started to build up. And that is such an advantage. Normal originators can get business. Small broker shops can get business in their local market with Google, local search, and AI search. And so that's a big component. And then the other thing is social media and understanding the difference in the platforms and how to get out there and use them to get business. It's not just about, I see Frazier, he does shake it really nice on the TikTok dances. But it's
roll, baby.
Yeah, I was going to say, Frazier, let me let you talk for a bit. I know I'm a guest, but I've done all the talking. You jump in on the social media side about what are LOs? What do you see with the trends for LOs on that side?
Well, and look, this is having you on as a guest, so that's, and Michael doesn't like when I talk too much anyway. He always tells me that. He's like, dude, you monopolize the entire, exactly, right? That's like I get that in the background all the time. But look, when it and I'm sure you'll agree with this, is like when you talk about your grab and go social, is that ultimately, like, first and foremost, like with social media, you have to grab attention in some way, form, because otherwise you're just another quick small little box, whether it's on the phone or on the desktop, they're scrolling by. So how are you going to grab attention enough for them to read all the other stuff? And so the loan officers that I see having success on the social piece are the ones that have something that's a little bit different. Right. And they're not doing the, like, look, I'm all about educating and being like that advisor and not like just pitching them all the time. However, to the point is where, like, guys, like, that's not what they're looking for. Right. And they're not. And ultimately that also comes across as being like, and Hammer, you said it already, is just being overcomplicated. So I think first and foremost is that the loan officers that I see that are doing good are talking about the stories, right? And that plays into what Hammer was talking about. And that's the emotions, right? That's the feelings of that. And so, you know, if I'm a consumer and I'm seeing whatever, and like, you're going to stop on some of those stories, like, you help someone out, or like, I saw this homeless person and I went and, helped them out, or I went and did charity, or I went fishing, hunting, or it's like personal lifestyle. Right. And so ultimately, if I'm on social media, cause no one is on Facebook scrolling, like hoping to see like a mortgage ad or like what are rates doing. But as they go through, and if they happen to like have you a part of their ecosystem, and they see like, hey, I just helped, Cliff out with, he's a veteran.
Yeah.
And, he got denied, 12 months ago. He didn't think he was going to buy a house. I just happened to like get connected with him through someone else, not even about mortgage, but just about something else. And then we ended up talking, I found out I was a mortgage broker, and here we are 12 months later. Now he's a homeowner that he didn't think he could do. Right. Like, that's something that's going to resonate. That's going to stay memorable. That's where I see the lift coming from. It's not for the other stuff, but of course, as all of you know, because we all have loan officer clients, that's when you get the pushback. Well, no, I sent out that birthday email and I got like a response back or whatever. I'm like, I'm not saying that like that doesn't like won't ever elicit a response, but I'm telling like what we're talking about. We'll do the exact same thing, but you'll also like open up your umbrella to include way more people to actually like stop and see that message.
What I don't see people doing enough either is cross-pollinating with the different stuff. So in other words, our perception is very, very fast to form, and it changes constantly. So we talk about social media. So now there's a perception. I need to put videos up that people are going to see, and they're going to call me to do a mortgage. That's not necessarily anything to do with social media. The idea for social media is for people to get to know you, because people will do business if they know, like, and trust you, not because you told them the difference between a pre-approval and a pre-qualification. Okay. That's boring and people don't give a shit. But when they get to know you, and I can say this because I've been doing a live for 10 years now. And, the reason that we do business, I haven't run an ad or done any strong sales stuff in years. It's because people feel like they know me. They see me all over the place. And that's why they do business with me. They're comfortable. Or those are the ones that go, I'm never going to do business with him. And that's okay too. You're going to have a few of those if you're doing it right. But if you've got that email going out to your past clients, why are you not saying, hey, here's a video I did on YouTube about this, or here's a rate forecast for 2026, and then putting that on these different things and recognizing the platforms are also different. Facebook is about basically it's digital networking, and I can be very proactive on Facebook. I can seek out people that I want to see me and comment on their posts or message them and tell the algorithm, hey, I haven't heard from so-and-so in a while. In fact, like, I was thinking about that this morning. There's a guy, Ryan, and I can't remember Ryan's last name off the top of my head, but he was a video guy. You guys probably know Ryan too, right? He was an originator, him and his wife, Jessica.
He was like down.
Ryan Eller. Yep.
Ryan Eller, right?
Yep.
And I'm like, is Ryan Eller still doing any video stuff, or is he still in the business? Because I haven't seen him in my algorithms but all of a sudden, if I go in there and I like message him or I seek him out, he's going to start to see me again too. I can manipulate the Facebook algorithm, stay in front of real estate agents. I can use it to stay in front of past clients. We talk about CRMs. Hey, by the way, do you guys know a good CRM?
No.
It's like we talk about CRMs. Social media is one of your best CRMs. Instagram is great for staying in front of your past clients and your real estate agents. YouTube, you can do more educational thing, but YouTube is getting to be more and more production based. A lot of the videos on YouTube, if you want random people to watch you, they've got to be produced pretty well, because they're not going to watch low production. But yet on TikTok, it is all about authenticity. I can get on there and just start ranting shit right off the top of my head on TikTok. And the more I rant, Ariel Best, I mean, crash and burn, but she built a crazy business being
for sure.
crazy Ariel. And I love Ariel. And anyone that knows me, Hammer's talking smack about. Nope. I never talked smack about Ariel, but the whole thing was on TikTok, her rise, her fall, all of that. And she was authentic and she was herself. And people did business with her because she was Ariel. And that's what you have to remember. Like, these different platforms can be used different ways. Don't try to do all of them. Don't try. And like Grab and Go Social, canned content sucks. And we give you canned content. I have a product that is built on giving you canned content. And yet I'm telling you, canned content sucks because we use it as a stepping stone to try to get people to do more. We give them canned content, but then we also give them coaching and community to get out there and build on that canned content. You need the consistency. You got to show up every day. You don't feel like doing it today. Okay, great. Here's a post. You can edit it in Canva, put this out there. Tomorrow, let's green screen a little bit and do some stuff where you talk about something and you talk about something in life. You tell a story and get that part in there that actually does get business. So, we try to it's a stepping stone to bring people into what will more work. There is no magic, set it, and hey, I'm going to hire a social media manager and they're going to get me business. If it were that easy, they'd be loan originators out producing you.
Yeah.
I have go ahead, Michael.
I was just going to say, I think it's one thing that people forget about or don't really think about is the like amplification effect that balancing in-person networking has with these things, especially on Facebook. Like am I good still?
Yeah, you're good.
I accidentally hit my mic and that fucking mutes it. It pisses me off. Anyways, the in-person networking, especially one-to-many opportunities, whether you're hosting a class or you're showing up to like a networking event with a bunch of real estate agents and stuff, that has an amplification effect, both psychologically, like it'll solidify your social relationships, but also with the algorithm itself, especially on Facebook. Like, you'll notice at any time you go to a networking event, if you're going to see friend requests or suggested friends that are people that have never shown up in your suggested friends
everybody
before.
It knows you're there.
100%. And so I think we get wrapped up in the digital, and all three of us here, like digital marketers, but it's crazy. Like, ultimately what we're going back to is like you said, like, you want people to know, like, and trust you, and in-person networking and connection has an insane leverage and amplification effect on that. And so, like, we can't forget to mix that stuff in too, especially if you're working in a local market.
It does. And that's a great point. And by the way, guys, I'm looking at the recording time. How long you want to keep this? About a half an hour? Are we running up to the end just so I know where to go?
Oh yeah, no, we got time. Yeah, up to the hour, but yeah, we got.
Oh, the hour or half an hour?
It's like we're rolling, so it's really your time. We have another one coming in, but like that's
okay.
Like
all right. So anyway,
we're
kind of where I was going. So remember, I wrote loans from 2000 to 2010. I went broke in 08 when the industry tanked, lost everything. I lived in New Jersey and I wanted to move. And the problem was I wasn't going to go find another job that was going to make me more money than I was making, because by the time the mortgage business tanked, we started the whole Great Recession. I mean, we're very influential. We started the whole thing. We brought the whole economy down. And I'm uneducated, barely graduated high school, even though I because I got in trouble, not because of my grades. And so anyway, without a college degree, I wasn't getting another job. So I'm still originating loans. And back then, 2008, the internet was building and Facebook was a big thing. And I'm like, can I build a mortgage business that I don't have to be face to face? Because when I was doing it, it was all face to face. It was a local, you were in your market, and that's all you were really going to be, unless you were buying leads. And that wasn't a way to build a business. And fast forward to where we're at today, you're talking 15 years later, you can have a business anywhere in the United States, no matter where you live, because of what's available to you digitally. And it opens the door for doing business in other locations and other places. Also, you should have a referral network. If you do build yourself online and you're getting business in places you can't do it, I can introduce you to somebody that can. I mean, it's I don't know. There's just so much more opportunity with this there. And we take it for granted. It's kind of like cars and everything else. I mean, there was a time that mankind, you were out chasing food every day, and we still do that in a different way. But I go to the grocery store and I get myself 2 overpriced New York strip steaks.
Yeah. I think
picturing Hammer chasing.
Yeah, I think I 100% agree, and that's one of the things I love about online marketing. I think the trap that a lot of LOs fall into, like most LOs don't think that way. Even the ones that are obsessing over online marketing, they aren't thinking outside of their local market. And so those LOs, like you got like you can't you like it's one or the other. You either have to be all in on online and expand your geographical horizons, or you go all in on online, but really all in on online doesn't replace your in-person interactions, your relationship building, et cetera, because any of the other LOs that are like marketing themselves as a local LO, they're going to have more than a digital presence. They'll also have a physical presence. And so I 100% agree with that. I just think that people kind of fall into the trap of wanting to be a digital LO, but not expanding their horizons to think like, oh, I can do this in this state over here, or maybe even the same state. If I'm in California, shit, dude, the state of California is big enough that you could only be licensed in California and still market throughout the entire state and crush it.
Yeah, I mean, that represents 4 states on the Eastern Seaboard. You know, I always have to remind my mother-in-law. She's like, "Oh, we're going to San Diego. Can't we just go to the Redwoods?" I'm like, "Yeah, by airplane."
Yeah.
Like,
So it's right down the street.
It's it's not right there. It's it's a big state. So
yeah.
So as we wrap up, the question I want to add, because just like us, you deal with originators every day, right? And you see that, and then obviously with your companies that you have, you see what works, what's not. So you have a lot of data that you get to personally see from originators. So with what you're looking at, where do you see it? Like, where do you see the loan officers that are your clients that are having the like just are, where everyone else is like, well, I can't do this the market, this rates, blah blah blah. The ones that you see that are like having success, the ones that you see that are just doing really well, what does it look to you from a data perspective? Like what's the common denominator that you see?
consistent action, consistent activity, whatever one it is. So, like, originator success focuses on building an online brand, generating reviews, and we've got like a CRM light type thing for keeping in front of past clients, prospects, things like that. The people that never put names and people into the system and aren't actively pushing and getting the reviews, they get much lower results than people that are out there constantly putting new names into our mini CRM, if you will, and keeping them in front of those people. You need to be constantly looking at your prospect pipeline. You need to recognize that success in 2025, the last couple of months we have, and definitely 2026, it's going to come in ebbs and flows. Getting consistent business is very difficult, especially depending on the market. So you need to make sure that you are staying in front of your past clients and your prospects. Servicers have always hounded their people, but they're 100 times worse now. And you can't just expect that because Michael and I, we did business a year ago and it was great. And we were best as friends. We were talking about the wives. Well, a year later, I can't expect that Michael's going to call me to do his loan. I need to still be keeping those relationships up. So the ones that are winning are the ones that recognize the prospect pipeline, that you have to have a lot of people in your prospect pipeline, and you've got to be staying in touch with them, connect with them on social, make sure that they're remembering you, make sure you reach out to them. It's not just a quote unquote CRM with automation that sends out a crappy birthday email. That's not going to do it. It needs to be multifaceted, a multi-targeted approach. And you need to be every day, you need to be looking at your activity and what did I do today? Not what loans did I write or what loan fires did I put out? It's what did I do to ensure I'm going to have business next week, next month, 2 months after. What did I do today for that business? Because the problem with originating is it's not an immediate return business. It's very, very rare that you can be like, I need a loan, and you go out and you get a loan. It used to be that you could go to real estate agents and get a loan a little quicker, but even that's not as quick anymore. So you've got to constantly be planting so you can harvest.
Yeah. And the the thing about that, and if you're listening, you know, originators that are listening to us are like, maybe they're expecting like, oh, there's gonna be some like secrets. So guys, consistent action, you know, and it's so simple. Yet, yes, we know it's life happens, you get busy, whatever, and you may say it's not easy, but ultimately it's not AI, it's not all this other shit, you know, that's out there that's going to do it. And if you take the three of us over the lifetime that we've been in this industry, you're talking tens of thousands of loan officers, we're talking billions in production, right, in the aggregate, like, you know, so like we've seen it enough to know like what's going to work. And that my answer would be exactly the same, right, as a coach and as someone that works with loan officers every single day. The answer is exactly the same: consistent activity, consistent action. Like, how many conversations are you having? What are you putting into your database?
Look
right?
at DC, you know, Darren
Yeah,
Copeland. Look
100%.
at, you know, that is a guy who preaches consistency, and not only preaches it but lives it.
Yep.
And because of living it, he has success that other people go, well, it's easy for him because it's all right, because it's, well, it wasn't easy when he started doing
exactly.
it.
Yeah,
You know,
yeah.
but it's because of that consistency and that, you know, just every day doing it, well, it brings results.
And I'm glad you said that, because it brings up this, is that the shit does not get easier, right? Technically, the process, it's just that you do it enough to where it seems that it's easier than what it is. And then from the outside, you're like, oh, well, it's like you said, perfect example, because it's like, no, it's like, it's still just the same. Nothing's changed. It's just that I've done it enough that it's not.
I was listening to the Joe Rogan, Matthew McConaughey podcast last night, and they, you know, it's kind of at the end, they were talking about, Rogan was talking about like that he does the cold plunge every day. And I've heard him say this on a few different podcasts, but like every day he's like, I don't feel like getting in that thing. And there's that voice. It's like, well, I'm not going to do it today. And he's like, I think he calls it like his corporal voice or his captain voice. He's like, get in there and do it, you know. And then he was talking about David Goggins, you know, who, by the way, Trunis Goggins, who's David Goggins' brother, is I used to play hockey with him before I broke my leg, and then Helene killed our hockey rink. David Goggins, you know, talked about how getting out and running every day, and how he would spend a half an hour looking at his running shoes because he doesn't feel like doing it that day. It doesn't ever get easier. I've been doing it live for 10 years, and every day I'm like, I don't feel like doing this.
Yeah. I was going to say, right. And it's just the fact that you actually lace them up and fucking do it. Right. And that's really what it comes down to.
So if we're going to leave everybody with something, I will tell you this one thing that makes it easier: don't depend on discipline. Discipline is very short-lived. It's very hard to stay disciplined. You need to be emotionally attached to a goal. And when I say a goal, I don't mean like the goal where you like, what is my reward? Why am I doing this? My why. The best I've ever been in business has been, and even in life, is when I journal, why am I doing this? What do I want today? What do I want tomorrow? You know, there was a time where it was putting my daughter through college. There was a time when it was buying a home. There was a time when it was a couple of other things. And it's, you know, why are you doing it? If you can keep that in front of you, it does make it easier. It's never going to be easy, but it makes it easier to be like, I have to do this because of this. One of the worst things that ever happened to me was success, because then I didn't have to worry about money. I didn't have to worry about those things. And you have to find why you're going to do this. Why am I going to, you know, when I'm broke, it was easy to be busy when I was broke because I had a why. Now that, you know, you have to find your why every day. Find your why. That's what I'll leave everybody with for that. The nice little secret is think about why you're doing this emotionally. What drives you? Because like same thing, like Fraser, I noticed you were on a weight loss thing again, losing weight. You know, it's going to be healthier and this and that, but there's a why. There was something that you went, I have a reason I want to do this. And then all of a sudden you started taking action, consistent action. Now you're seeing results.
Yep. No, 100%.
Good job, by the way.
Oh, thanks, man. And to your point about the cold plunge, is like, like this morning after my workout, I went into a cryo chamber for 3 minutes at a negative 125 degrees. Like, did I want to do that? No. Right. But like, it's just part of the process. And so it's 100%. And with that, I'll leave it to my man, Michael McAllister. Final thoughts and the wrap, buddy.
Yeah.
Take us home.
My only thing is sometimes sometimes it takes commitment before consistency. Like a lot of people listening to this will be like, hey, what's consistent? But consistent with what? I'm consistently trying to find what to be consistent with. Like, and it's just, it's choosing whatever it is that you're going to be consistent with and committing all into it.
100%.
And then that
even when you don't see
comes
the results, you're right. Because at the beginning, when you need to be the most consistent and committed, you don't see the results to give you that reason to keep going, and that's when you have to be the most committed. So that's a great point.
100%.
Awesome.
But with that, guys, Hammer, thank you so much for joining us, man. Fun. This was a fun episode. It's I don't know if it's as fun with you on it, but it was fun. And we look forward to doing this again, man. Thank you so much.
Take care, everybody.
Awesome.
All right.
With that, guys.
Oh, you got it? Okay, got it.
Oh,
go.
Yeah.
Sorry.
I think
My bad. I thought you were done. No, go for it.
Oh, with that, guys, thank you so much for listening to the MLO Project. Check us out on YouTube. We have all of our videos up. We're on Instagram as well, posting shorts. We'll get a little bit more creative with those shorts, but for right now, you just get to see either me, Frazier, or this time Hammer chopping it up. So thank you so much for watching in. Stay tuned for the next episode. But until then, we'll see you at the top.